Welcome to a new update. We are back on YouTube and today we're just going to have TA because markets are heating up for the breakout finally. And here's what we're going to discuss, which is we're going to discuss levels that you should be looking at if you want to get into your entries. As probably most of you are looking at shorts of the markets at this point, and that's why open interest has been skyrocketing. But is that actually the best play at this point? That is the question, and I think that once everyone is looking at a potential play, which is the short, it might be a good reason to start looking for those longs. And yes, I've been saying that for approximately a few months already, but I think that the thesis hasn't been changed, and I think that Bitcoin actually shows strength overall to just consolidate here, while the indices have been making new lows. So that's what we're going to discuss in this update, but before we continue, make sure to hit that like button and subscribe beneath. And also, as you know, yesterday in the live stream, we've announced a new partner, which is Bybit. And yes, Bybit you will see all around social media. But Bybit has one of the best interfaces, works for us in our premium membership, because we will be integrating some very interesting key features, which is the copy trading part. So we are actually building towards our fund that helps you to improve your returns on your portfolio. And that's why we decided to work with Bybit. And because of that, until the 10th of November, you can get 1 month for free of our premium access. What do you need to do? Join Bybit through our affiliate link. You can find it in the description beneath. Deposit $100 and then you get 1 month for free on our premium membership. So that's the intro, and now the markets are heating up for the breakout. Bitcoin has been very volatile in the past few weeks, especially since CPI. We got the low at 18.4, took out all the liquidity there, started grinding back up, and now we're just consolidating within the range, but we are facing a crucial resistance, and that's what we're going to discuss. So let's head towards the charts. Once we start looking at the price action of Bitcoin, we can conclude that we are into a period of no volatility. We are heating up towards a pretty massive breakout, as we can see here. We have been making lower highs. We have also been establishing higher lows. If you erase the wick of the CPI, which was pretty much a liquidity hunt. What do I mean by a liquidity hunt? It is taking all the liquidity from the recent lows. So what you can see here is that we've had these lows here at 18.2, another one at 18.5, and then we've got one at 18.9. So once we started to become volatile, we actually started getting beneath this recent low at 18.9, and then the stops of the longs got hit, but also shorts are closing their positions, and then it starts to get a cascade in which it takes out all these lows here, right? We finally still have one more low to take, which is the one at 17.6, but it's not very likely that we're going to take that one out right now, especially since we had this big wick already beneath the recent lows. So that's what usually happens, is that you get a liquidity hunt and then the market starts to reverse. So over here we've got a 2, we had a drop beneath these lows right here, right? So we have been taking the lows of the previous run. We started running up quite fast, taking out the highs here, and then we started to reverse, and after that we have been taking the lows. So what usually happens if such a price action occurs? You're probably going to see liquidity being taken above the high as we have been taking the lows. In that regard, it is very likely that we're going to take out 20.5, and given that we've got this big gap, it is very likely to assume that then we're going to run towards 22k and get our relief rally, or at least some momentum, as we are into this range for a very long time and didn't really have any relief rally at all. And you know, I'm not saying we are into a bull cycle, but if we go back into time, we are into a bear market for approximately 1.5 years on the altcoins, and also approximately like that for Bitcoin, a bit more than a year, but it was barely a new high. Which is very comparable to what we have been experiencing in 2018, in which we had a bear market for technically a year, and then still within the accumulation range, we had a run of from 3k towards 14k, which is almost a 5x. I'm not saying that we should get the exact same, but once it starts to turn around, shorts will be getting liquidated and have to be forced closes Therefore, more and more longs are going to be hit, and then we start to run quite fast. So if we get a relief rally, I think that 30k is on the cards and maybe 37. But for now, first we need to crack the level at 20.6. Then also we are getting back above the 200 week MA, and we are going to sustain the support at the previous all-time high of 2017. So when we're looking at the markets overall, you also want to watch the 10-year yields on the US. Right now we are still running up with those, but if we are looking at the chart, it is going pretty much vertical, and we are waiting for this trend to start to turn around, because the last time we had it, which is here in June, we started to get a momentum on risk on assets. Remember the relief rally we had from 19 to, or actually 18k to 25k, that happened in the period where yields were showing weakness, and also where the DXY was showing weakness. Well, the DXY is showing continuous weakness at this point, and will probably continue to do so in the coming period. And that will be suiting the markets for Bitcoin, in which we can conclude that there might be a breakout on the levels for now. So when we're looking at the lower time frames, you can see that I've been using this chart a lot, and we're still facing crucial resistance, which I marked yesterday in the live stream. So what are we looking at? So we are looking at a crucial resistance at 19.6 that we have to break through, which is the range high we have been testing a lot, right? So we have been rejecting it here, started falling towards the lows, bounced back up, and now we are facing it as resistance again. On the upside, we also have 20.7 as an untested level, and we do have this entire block at 22.3k, which probably is going to be the target once we crack 19.6. Now, on the downside, we also have 18.8 in the range lows, but we have been testing those already. I think that if we're going to lose the trend here, it is very likely to assume that we are going to sweep these lows at 17.6. So then, yes, we are targeting 16 high or maybe 17 low as a potential bottom of this entire downwards correction. So what are we looking at for scenarios? First one is the one that I've marked here. Technically speaking, I think that you don't want to see the price of Bitcoin drop beneath 19.2 to 19.4. That is optimally the best area to start looking for longs. I think 19.45 is also a range that you can start looking at longs first, and then you're looking at a scenario like this, in which you place your stop beneath that recent low. This is your stop loss area, or the area that you want to have as a potential loss to 1.8%. Your first target is 20.7, resulting into a risk reward of 4, which means that you have to, if you are right 20% of the time, you will be profitable on this entire trade. And then the second TP is 22.3k, which makes it 9 to 1. That is scenario 1 that you could be looking at, and as you can see right now during the recording, we are looking at a potential case that we're actually hitting those ranges. The second scenario is the one that you don't chase this one or don't get filled, is that we bounce towards 20k, reject there, consolidate at 19.6, and then you can start establishing the exact same trade. However, as you can see, you have to adjust the stop loss on a tighter space if you want to look for TP at 20.7, because if you take it this wide, assuming that the next higher low will be made around 19.4, you are not going to get a very optimal risk reward ratio. It's 2.6, but just less. And in that case, we are looking at 22.4 to actually create that optimal trade. So those two scenarios are the ones that I'm looking at when it comes to longs. If in theory this level is going to be lost as support and buyers are not stepping in, we are going to bounce all the way towards 18.8, and then you're looking at a short at 19.2 to 19.3, targeting the range low. So in that case, we are looking at a play like this, in which we reject in this area, have a lower high here being placed, and in that way we can start targeting the range lows at 18.4 and probably 17.6, resulting into the same risk reward ratios. I'll be updating this chart in the live stream on Thursday. I hope you have been enjoying this update. Also, make sure to stay calm in the markets. It is a very boring range still, so it's still time to start investing, accumulating, avoid very risky actions, and also make sure to, if you want to build your portfolio, make sure to check out Bybit and the action that we have, because that helps you a lot to grow your portfolio. Make sure to hit the like button, subscribe, and I'll see you again tomorrow. Ciao.